Okay, Paulie, thanks so much. Kumar, I see you in the house. Your interview begins in exactly 50 minutes. You're very welcome to hang out and listen to some of our analysis as we go through the day. I just wanted to touch on a few things for the Fed. I'm not a big believer in, playing roulette. You could do that at a casino, and red events to me are black or red. I'd rather react to it. So just a few things I'm thinking about. And yesterday I was talking with Blake how before silver came out of here, how much more evolved the RSI pattern was, that, we were diverging for quite some time and came out of this triangle. And I've been sitting here up until maybe a week or so ago, the opposite was true. Silver was leading to the downside. And I've been sitting here telling people, I may want to try a gold long at 1181, which was, would be 61.8 from this bounce that we had here. And it could still happen. But why do I want to buy something that's not breaking out instead of buy something that already has a stronger technical picture? I talk about, the American Idol analogy where you could be a great singer, but you pick the wrong song. Well, it's traders, it's trade selection. So you always want to buy the relative strength leader and short the weak sister that's rallying in sympathy. So right now it looks to me like silver would be on a break towards that 1430 level or so, and we're not that far away. Maybe 1425 would be a better buy, and you have a nice frame of reference or fail-safe stops down here. Also, we continue to correct in EG. I think it's an opportunity coming up here in EG. So we've gone to two fib levels, got a bounce off the 38, got a small bounce off the 50, heading towards the 61.8 here. So I'm not going to do anything before the Fed, but I'm figuring between 61.8 and 78.6 to try it with stops under the low, just to see if this was real last week and not a 1 week wonder. Because if we get a continuation of it, this was a pretty strong move. So even back above 89.50, if we start to go from here, that's going to take you back to the highs of 91. And longer term, I still think there's a shot for new highs up here, drive 1, 2, 3. And then when you really get out your telescope and you look at the monthly, up there, should this scenario play out for a 1, 2, 3, this is your monthly up towards 93, 94. That's going to be potentially a failing rally from this big break we had all the way back in, the beginning of, or the end of the financial crisis. So we're approaching some pretty critical levels here. I'm thinking one more blast, and then you could probably start building positions for bear market in this instrument. Let's see, anything else? The stock indexes look like they, still want to, like I said yesterday, they're buying NASDAQ 100 stocks because they're now a flight to safety. And even though they're not, you have to hand it to these these people buying dips. It worked. It was safety this week. We're in this descending triangle here, so let's see if this is a real breakout. If it is, we're going to make some new highs here in NAS. If not, descending triangle failure is really, look at this low here, everybody. Okay, so this was Monday's low. I really thought that after Friday's action that we're just going to, go back down to the base of the descending triangle and break down, but they held it together here at the lows, which let me teach you something. The low here was 74.47. So I teach people, it's a pretty simple method, but you may want to start paying attention to these numbers. 2 week off number is 75.44. So the week before it held the 2 week off number after taking it out by 10. So something you could work with. It works on all time frames. I use it mainly for weeklies. And as far as the dollar is concerned, just net direction in the dollar. I think you have to try and sell rallies here, maybe up towards 94.90. Starts getting above 95, then you're going to have this 95.50 test, which I think is going to put a lot of the dollar bears under pressure. But, you know, a pop up here, I would try it and see if we could get halfway back into Dixie's 92.70 and 61.8's 91.69. And when you look at the weekly, I had kind of a wedge that it broke out of that came in at 92. But I'm thinking that this low that we had from 88 was good, and this is just a pullback into these fib retracements that we're not going to make new lows. Although there are a lot more people thinking that, you know, the euro has bottomed. I'm thinking there's a pullback and then one more rally in the dollar, possibly back to at least par. And I know a lot of dollar bulls that are talking big numbers to the upside, but let's use Steve Volge's example. Do the right thing today, and tomorrow takes care of itself. So I want to wish everyone good luck on Fed Day and remind you that this is the last week for our once-a-year promo. So sign up so that you could be following Paulie and be in our member chat room after FACE is over. Big edged, you know, I challenge anyone listening to my voice to find a place where there's more trading acumen, knowledge, experience of the markets that's shared to you, and with our technology shared wherever you are, working, on vacation, at the bar. Don't trade a lot from the bar, but you're going to get these push alerts, and really this is all about the team. And in one site, where are you going to find this? Also in one site, where you're going to find Elliott harmonics, basic technical, candlestick, macro, everything. Okay, so you know, I think that the guys have really assembled the strongest team on the net, and I say this without, you know, trying to be too puffed up, but I think FACE is the best webinar on the net, whether you pay $100 a month for it with somebody else or you have it free with us. So every day for free, there's power-packed ideas for you guys. So the way to say thank you for if FACE is added to your success of being a trader is to just become part of our family and support us so that you pay it forward and we keep these free seminars going, and you can remember what it was like from when you first started trading and your head was spinning from all the hype and everything else on the internet, and we could get some people to a safer place. I'm not saying safe, let's just call it safer. So with that being said, Blake, how you prepped for the Fed today, buddy?
Good. Hey, good morning, Dale.
Good morning, buddy.
Yeah, how's it going?
Good. Good, man.
You know, I just took my dollar Canadian off the table long that I've been sitting in since Friday, and actually I still want to be long the dollar Canadian. I actually want to be long the dollar in general. I'm not going to go into the FOMC long the dollar per se, but that's kind of the position I want to be in following the FOMC. You know, I was reading a note from Mark Chandler earlier today. Yeah, Mark's great. And here I'll take this over here. Just give me a second. Come grabbing the chart. So you know, I was reading a note from Mark Chandler today about I think it said like 4 out of 5 last FOMCs that the dollar had weakened, and the market is and was extremely bearish the dollar going into last week, and as you can see, the euro is approaching really key support. This is I'm actually going to draw that little dotted line right there. That's the 117.20. You can see this is really more of the breakout across the board. It, you know, comes in right around this 117.20, 117.30. It's about ready to trip some alarms here on my charts.
It's kind of taking a long time to get going. If that was a major breakout, is that kind of what you're thinking here too?
Yeah, and the problem that the euro had is it stalled at the 38% retracement. Yeah, it's a big 38% retracement. Everybody had 120 on the radar with the euro, and that I'm just not in agreement with. And you can see the, you know, gold is failing up here. The silver it was trying to break out. And matter of fact, silver still is kind of holding its breakout point, kind of, I guess. But you know, people are getting shaken out ahead of the FOMC, and the Fed is raising rates. Okay, inflation, I don't think is going to be I think it's going to be more of an issue moving forward for the entire world, not just, you know, it's a I forget what the word that you use.
A monetary phenomenon, but this is a tariff. This will be a tariff phenomenon, artificial.
Yeah. I mean, it's gonna be a global issue, and it is gonna be here to stay. Prices for goods, no matter where you live, are gonna start to rise, and that's gonna keep the Fed probably in the hawkish raise camp, and everybody's expecting a dovish hike from the Fed, and I'm not so sure about that. And a lot of that would have to be with you know, the Fed governor's comments on, you know,
they're extrapolating Jackson Hole. You know,
it's
going to be like that with dove wings on, you know.
Right, and I don't know, I don't necessarily agree with that, and but that doesn't mean that I'm going to just plow into euro dollar shorts right now. But what I am pretty keen on today is following the FOMC. If I have to play the short side of the euro dollar from 117.20 lower, I will, because I think the market is extremely bullish at the moment. The euro. Now, the one thing that I'm perfectly clear with myself and in my head is if we get above 118, and we get a good foothold above 118, then I am going to be bullish the euro. So just because I feel this way right now doesn't mean that that's going to be the case following the FOMC either. So I'm flexible enough at this point to play either side of the euro. I think the risk is to the downside. I think the risk is that the dollar is going to strengthen today, and it's the euro on the short side that I'm more willing to play, and it's actually the dollar Canadian on the long side that I want to play as well. And like I said, I just exited my dollar Canadian longs right here, and I've done pretty well. I mean, I was in a pretty aggressive position as of Friday, so I had a fairly large position when we were at 129.15 ish on average, and I do want to play it, continue to play it to the long side. I believe that the dollar Canadian is the trade to be in, because I believe that Canada is not going to meet its September 30th soft deadline for NAFTA. I think they're going to push it off until after the midterms, and I think it's going to continue to strengthen the dollar Canadian. And whether NAFTA gets completely thrown out the window or not, I don't have enough foresight to figure that one out. But I think that I think Canada is going to play some hardball here, and the dollar Canadian will rally. Now, do I want to be long do I want to be long the dollar CAD right at this moment in time? No, that's why I took it off, because I'm waiting for following the Fed. But I do think that that the risk is that we will trade higher as of right now. There's a other, like a lot of people are like, well, what are you going to do with the cable? I'm not really too keen on trading the pound right now. I did miss the short from last week. I mean, and by the way, the pound, just like the euro rejected the 618, the pound dollar rejected, or excuse me, I'm sorry, the 38% retracement. The pound really rejected the 38% retracement too at 133. I actually had an order to short the pound dollar at 132.03 last night. Never got tripped. The reason why is I wanted to be short ahead of the 618. What I thought was going to happen is we were going to, last night, this is an hourly chart, so we were here last night. I thought we were going to pop to the 618 and down. That didn't happen. So my order never got my order never got triggered. I wouldn't mind being short the cable if it was up there and we were here currently, but like I said, it just didn't happen the way that I was hoping it was going to happen. The Aussie, a big failure at this trend line. Really big failure at this trend line overnight, and Aussie can't get out of its own way. And frankly, if you get below 72.20, that's where this is the neckline, the inverted head and shoulder pattern neckline was at, and so a break below 72.25, and you're going to see some longs probably get taken out. As we failed this downsloping trend line here, this blue one. The Kiwi dollar trade numbers were actually, I was really surprised last night to see the Kiwi spike up. It spiked up 50 pips, and I couldn't figure out why. I shorted the New Zealand yen last night at 75.35, and then I closed it for a break even. And then I got up this morning. I was a little frustrated that I took it off for a break even, because I would have been up 30 pips or 25 pips this morning. But anyway, I was surprised that the Kiwi jumped 50 pips last night following the generally weaker business confidence. Well, actually, I think let me see, the business confidence numbers came in I guess a little stronger, but it was the trade balance numbers that were a little weaker, I guess. So it was a mixed bag. But to see the Kiwi spike up there, I was like, I don't know if I believe that. And then we've given back, excuse me, we've given back all those gains this morning already in the Kiwi. We talked a little bit about the Canadian, and also you got to keep an eye on the Swiss franc. If you look, the Swissie is almost at the 50% retracement, which this morning ForexAnalytix. The analysis is ahead of the FOMC that the Swissie has broken the downtrend line of the channel and could press the 97 level or 50% retracement resistance. And we're almost there. We're within 10 pips of hitting that 50% retracement. But you can see that the Swissie is pressing higher as well. So the dollar is firm. And I think a lot of traders that were short the dollar ahead of the FOMC are getting squeezed. Even the dollar yen is moving higher. The dollar yen is actually at new trend highs. You can see the dollar yen is almost pressing resistance here at 113, 113.15. Now, one of the other things that I'm going to be watching very closely today is that I'm going to be watching the 10-year bond market, and yields have been on a tear, as you guys know. If you look at the bond market, let's go over to we'll look at the 10-year this way. So the bond market has been under pressure. Yields have been rallying. The dollar has been fairly unresponsive to the rise in yields. So yields have been going up, bonds have been going down. What I'm going to be watching for today is to see if bonds actually do bottom today. If they bottom here and we rally, yields will continue to go down. How will the dollar respond? I'm not sure. The dollar might actually, depending on what equities are doing, but if the bond market rallies, yields come down. We haven't seen the dollar go up. Can the dollar go down or go up with the yields going down? It's possible, especially if it's under some risk aversion type of scenario. So now you're probably going, well, what, are we going to get risk off? Are we really going to get risk off? We're at all-time highs in the stock market. We are getting towards that, extensions, if you will. And if you look at the S&P, we're at the top of this wedge. Okay, we're at the top of this wedge. If the wedge starts breaking lower, you know, we could see a little bit of risk aversion. That could mean stronger bonds, and also stronger bonds, weaker yields, and also a stronger dollar. So that I'm going to be paying pretty close attention to. And one other thing I should note as I turn it over to Steve and Stelios this morning is keep an eye on precious metals. So gold still failing here, still can't get over this 12-13 level. So it's, you know, 1-2-1-3. That's a real big resistance for gold. Can't get above it. Silver is trying. It's attempting to break out, but as you can see, we're also flagging here. Well, we're kind of flagging, but silver is struggling. I mean, and gold is really struggling. And unless silver and gold press to new highs on the session, I have a really hard time being bearish the dollar, because the silver looks like it could be a failed rally attempt, and gold, you know, is, like I said, is trading heavy as well. So just a few observations ahead of the FOMC. I'm going into the FOMC. I'm going to try to be open-minded. Okay, I'm going to try to be open-minded with the dollar, but I think the dollar is actually poised to rally here. I'm not going to be long the dollar going into the FOMC. I'm going to react to the news versus being in a position, because I just couldn't squeeze off like the cable short overnight. I just took my profits in the dollar Canadian. I don't, you know, I know it's up against resistance, so I don't want to sit in that right now. So I'm going to end up reacting to the FOMC today, but keeping in mind that everybody is leaning towards dollar weakness. That is the biggest concern if I was short the dollar right now. And I think while the euro trades below 118, you have to be very careful being long. And that's my 2 cents going into today. So
Blake, you're going to be around in the members chat for the Fed, right?
Of course, I'm always there.
Yeah, I know you live there, but
yeah.
You know, I just want to remind our listeners and viewers right now that, you know, FACE ends and, you know, our analysis in 30 minutes, the interview within an hour. And, you know, I know a lot of people love your analysis and would like to know what you're doing right after the Fed. I know that there are other things that happen besides pattern and plays, and you're there with a lot of pros in the room, in the members chat room, that it's not a hobby, it's not, you know, a second vocation. There are a lot of people in there. This is, you know, this is how they make their living. So
absolutely. Yeah. And so in our chat room, this is what it looks like. This is for ForexAnalytix subscribers, and we have about 90 people in here right now. Usually, you know, it fluctuates from 65 to 110, I would say, roughly throughout the course of the trading session. And that's where we're at. You know, if you're a ForexAnalytix subscriber, the way you can get to it is right here, where there's this little chat box, and it launches the chat. And that's, like I said, that's where we're at that's where I'm at throughout the course of the day. And we're all sharing ideas and talking about markets. Actually, yesterday we talked about a lot of other stuff too, because it was just slow ahead of the FOMC. Yeah. And we'll probably get a lot of just banter there. And it's a great environment for traders, especially if you trade from your home. I mean, I trade for an office out of Connecticut, but I trade from Phoenix, Arizona, or Scottsdale, Arizona. So for me, it's you know, I spend a lot of time with everybody in there, and we just chat and share ideas and our feelings of the market. So
yeah, and you know what, Blake, people have to experience it, because, you know, people have had some bad experiences in chat room where you get some people in there that are disruptive with negative attitudes, that hope others fail to rationalize their own failures. And, you know, there's nothing but respect and cooperation. It's a true community in there.
We have ground rules in our chat room, and you can see that there's no swearing. We don't discuss politics. We don't discuss religion, and but we're all.
Well, I don't like the UN laughing at our president, any president.
That was,
okay, so I'm going to break the rule. I don't like it at all.
So you know, if you break the rules, we say something, and we don't really tolerate anything less than that. You know, we really enjoy, but you know, 99% of it is we really enjoy each other's company and have a great time there. One last thing, I just want to mention our partners or our sponsors, excuse me, for the FACE webinars, Forest Park FX. Make sure that you chat with these guys. You know, if you want to get reimbursed and you get reimbursed with ForexAnalytix and really get a free subscription, you know, join our reimbursement program as long as you're not in the United States. But if you are in the United States and you want to get like a cash back rebates while you're trading, which I don't see why anybody wouldn't, you know, you need to talk to Forest Park FX. They're a great group of people to work with. Their contact information is at the very bottom of this page, where you have their email, Skype account at the very bottom of the page. Make sure you contact them. I actually got a white paper that I'll share with you guys at the end of this week, kind of explaining exactly what they do and how the rebates programs work. For those of you that haven't taken advantage of that, if you trade and you trade live in the markets, why wouldn't you have some sort of program where you're getting compensated for what you're trading out there? So anyway, make sure you visit our partners. All right, guys, I'm going to pass it over to Steve and Stelios. Good morning, gentlemen.
Hey, Blake.
Hello.
Hey. Good morning, Blake.
Hey, guys.
Since it is and will remain a slow session until the Fed, obviously, I wanted to ask you something. You feel that, you know, there is a higher probability of a move higher in the dollar following the FOMC. If we assume that that's the case, so we get like more of a hawkish stance, at least more than the market's currently pricing in, what would you assume that would do to risk? Because my personal viewpoint is I've noticed that, you know, we all remember it was for a long time, for many years, that whenever we got a more hawkish Fed, we got risk assets selling off. But lately, to be honest, the market seems to be taking that as a vote of confidence and usually rallying. Do you think that's going to be the case as well?
Well, yeah, well, I think the market actually likes a weaker dollar, and a stronger dollar. Yeah, a stronger dollar is probably going to weigh on risk appetite. So, I think it goes hand in hand. You know, if you see the stock market actually sell off a little bit, the dollar is going to respond positively. You know, and it's going to feed on each other too. So that I think is, you know.
You know, BK on Fast Money, Blake, he came up with a pretty good one. You know, he's saying the Dixie is the new VIX. So a stronger dollar pressures emerging markets, which has some spillover into other markets. So I think it's true. A strong dollar creates more of a risk-off environment. So the Dixie is a new VIX.
Yeah, I mean, that actually sounds fairly reasonable.
Yeah.
You know, so Steve,
and the FANG stocks are flight to safety. He didn't say that.
Well, so Steve, to answer your question, I think that if the dollar did strengthen, it's going to weigh on risk appetite. So
that would be hunting today, buddy.
Okay.
Good luck, Blake.
Thanks, guys, and have a great one, and good luck today, everybody at the FOMC. I'll see you guys in the chat room.
Okay,
Steve.
buddy. Good hunting.
Same to you, mate.
Steve,
Hi, Stel.
hey,
Hi, Stel,
guys.
Steve.
How you doing, Dale?
Good, buddy.
Good, good. A couple of little things to mention before you take over, Steve, if that's okay.
As much as you like, Stelio. As I said, there's not much happening, so I mean, we have time to talk about macro stuff.
Sure, sure. First of all, just to add something to what Blake was saying about the possibility of the dollar rallying, the DSI is in the high teens, 17, I think. So that shows quite bearish sentiment, and we know what happens when sentiment goes one way. Usually, the relief direction is the other way. So just something to keep in mind.
Yeah, although don't forget, Stelio, that we've seen you know, a lot more extreme readings.
Yeah, single digit. Yeah, of course.
And low single digit on very rare occasions, right?
Yeah.
Like 4 or 5, you know.
Yeah, true.
Aliki agrees.
Yeah. So two little things I wanted to mention. One which has attracted a lot of attention overnight, and one which hasn't. The one that hasn't is actually quite important in my opinion. Barnier, the negotiator on the EU side for Brexit, he actually said there was a meeting yesterday, and he said that, and I quote, "We are working for an orderly Brexit and a new partnership that respects the UK sovereignty, as well as the founding principles of the EU." So that, again, you know, Barnier has been a pretty tough cookie over the past year or so. But this is another kind of, you know, constructive comment, right? I mean, I can't take it any other way. So
stick and carrot.
Yeah, so they're exchanging punches, but at some point, you know, it's end of round 2, end of round 10, you know, and they're kind of taking it easy, and they become a little bit more constructive. So, you know, something that not many people have been talking about today, but I found it quite interesting. But the big news, obviously, is what happened in Germany, where the Merkel's choice for parliamentary group leader, a guy, Mr. Kauder, I think his name is, who has been the group leader for over a decade, actually lost this time around. And, you know, he has been the candidate that Merkel supports, and he lost. So this is seen as a little bit of a mutiny. And, you know, people are calling it the beginning of the end for Merkel. Now, I don't know if that's the case. And she kind of definitely glossed over it very quickly. You know, in her statement, I think she said, "Oh, you know, politics is a battle, and you know, you win some, you lose some." But I think it's a little bit bigger than that. That she's trying to.
Merkel, I think the two things we can definitely agree on. One, Merkel's political career is closer to the end than to the beginning at the moment.
Yes.
At least. At her current position now, I don't know if in the future, you know, they would consider her like for president or whatever. But the second point is that, you know, she's proven over and over again that she's a pragmatist, right?
Yeah.
So you know, I'm not really astonished by her taking it calmly, because, you know, she always approaches everything on the same manner, and I think that's one of her strengths. Now, on the other hand, as I said, yeah, we've seen her lose, you know, steadily but slowly, you know, some of her power, setting it for various reasons. It was, you know, the refugees issues, mostly, I would say, actually some other social issues, because I don't think there is any German that really has any complaints having to do with the German economy.
Exactly.
And, you know, this is one more proof that, you know, the most important element is the economy. I mean, when the economy is running as it should, you know, she's already been in power like for so many years, and, you know, it's like 90% due to that, right? But people eventually get tired, you know, of any person, and, you know, they start considering alternatives, even, you know, thinking that ideally perhaps somebody could bring some kind of a change or whatever. So I do think that, you know, she'll probably be out of office by, I don't know, the next 2-3 years, I believe. Now, I don't know who's going to actually take over, but I don't believe she's going to stay longer.
You know,
I believe she actually considered strongly if she would run this time or not.
Yeah, I think the danger always, you know, with a country like Germany is that, you know, the voters and the people, you kind of take it for granted that Germany is going to always be doing well economically. So that kind of takes a background step. And then the big burning issue, which has been the immigration issue, I think that's the only reason why Merkel is slowly losing ground. You know?
Almost only, yeah, almost, yeah, almost. Because
the main reason, yeah.
Because, you know, to agree 100% with what you said, that people take for granted what they have, and, you know, they're starting to dream, you know, about perhaps even something more. Is, you know, last time I visited in 2015, you know, the vast majority of Germans I know there, you know, were actually already like tired of Merkel. You know what I mean? And I was explaining to them, not comparing to Greece, of course, but I was explaining to them that even on a global scale, Merkel has been, you know, an extremely strong leader, and she possesses some of the elements you really want the person in charge to have. And, you know, they shouldn't consider it a given that, you know, whoever replaces her is going to be as good as she is in some things. But as exactly as you said, I saw the exact same thing. They were considering Merkel to be the baseline now, and they were looking for something more. I think they might actually regret it.
Yeah, that's dangerous, and, you know, you can't. You know, she has admittedly done a great job, you know, over the European crisis as well. You know, it was a very difficult time, you know, 4 or 5 years ago. So, you know, hats off to her for that. But, you know, like we said before, I think the whole immigration issue is what's bringing her down. But yeah, let's see what happens.
Her calm approach is definitely, you know, a critical characteristic of her personality, and definitely extremely helpful in periods of crisis, as you said.
Yes, absolutely.
And yeah, imagine if during the Eurozone crisis, Germany had a leader that was a lot more prone to panic or to take hasty decisions or sentimental decisions. I think it would have gone a lot worse than it did, right?
Yeah, absolutely.
Okay, so Stelio, if you could give me some questions before, because, you know, I usually go across the board, but let's be honest, I mean, the couple of things that have moved a little bit, Blake already mentioned. He mentioned Aussie getting rejected once again from this important trend line here. He mentioned, you know, the euro consolidating. He mentioned the move higher in the USD Swiss, which what he didn't mention, and I want to add to that, is that we're seeing a much stronger move higher in the USD Swiss in comparison to the move that we're seeing lower in the Euro USD due to a nice rebound in the Euro Swiss. So the Euro Swiss has been giving a helping hand to USD Swiss actually accelerating higher. But, you know, candlesticks are very beautiful because very often they, you know, they point to reversals. And unfortunately, I forgot to mention that yesterday that I wanted, but I completely forgot to show it. The day before yesterday at the close, we got a confirmed Morningstar formation here in the USD Swiss, right? So that's quite a strong reversal signal. And, you know, usually when you see something like that, you ought to respect it. Now, today, we're also breaking above the 96.50 previous support, current resistance area. Of course, it's still early in the day, especially considering the fact that we have the Fed later, which means that we can actually see this candle completely reverse course and, you know, use the Swiss even close lower. But if we actually do close above 96.50, I think that there is no real resistance up to 97.50 to 97.70, which is the most critical area, you know, for us to call a bottom. If we actually break above 97.50, I think there's going to be a, you know, a high chance that the pair has turned higher for good once again. You know, keep in mind, as you see, we're also breaking a trend line in the RSI having to do with the USD Swiss. And if you see, there was also very clear RSI divergence there at the low, and the one we call a reliable one, because the previous reading was even below 25, and the last reading that we had in the RSI was actually clearly above 30. So let me go back to the euro. As you see, the euro so far is just consolidating. So I really have no change in mind, in view. In my opinion, the euro can actually keep on moving higher as long as we remain above this broken trend line. But why not? We can come down and retest it. That's currently passing from 117 is definitely a level of importance, but the current trend line is currently around 116.50, 116.60. So we might have it. Yes,
sorry to interrupt. While you're there, our friend Rafael is asking if you think the uptrend of euro dollar is broken. If you see from early September, there's this uptrend, right? So it's kind of testing that that support of the trend line now. You see what I mean? Where you have the red. Yeah, there you go. That uptrend that way. Where the arrow is pointing, if you extrapolate it back down.
Oh yeah,
it's like a trend line, right? And like ascending.
Yeah, I understand what you mean. Nah, I don't think so. I think, but I'll tell you one thing for sure. Today can really change that, right? Is it broken at the moment? Do I think that that this likely corrective move higher is over? No, I don't.
Yeah.
Can it actually prove to be over if we get like a big candle today, like a big reversal candle today? Yeah, sure it can, because the Fed has the ability to create much volatility in the dollar pairs, especially, obviously. So yeah, I'm not going to pretend that today isn't important. Today is important, but let me say it oppositely. Let's assume that there was no big event today, right? So let's assume that there was no event today that could actually move the dollar a lot. And just by looking at this chart, would I believe that we're done moving higher? No, I wouldn't. I wouldn't. Actually, if you look at it, the past 4 days, including today, what they have been so far is a consolidation, which can once again, as we had in this instance here, let me mark it. So as we had in this instance here, right, this can be another instance of a consolidation before another move higher, right?
We'll have to wait for the day's close, basically. That's the main thing.
Absolutely.
Yeah.
Absolutely. The day's close is going to be super critical. There's no question about it. Yes. So I'm really curious to see what's going to happen. And I wouldn't necessarily be buying the first knee-jerk reaction if it doesn't agree. I mean, I would be more prone to trade immediately something if that something was like a big surprise that the market didn't expect, and then the move made sense. But if the statement, and I say the statement because I believe, Stelio, what does the market price in? Like a 99% chance of a hike? What does the market price in at the moment? Stelio?
Hey, sorry, I was muted. So yeah, I think I haven't done the calculation today, but it's as close to 100% as you can get. It's like 95%.
Yeah, so it's all about the forward guidance again, right? It's all about that. So we're going to get the hike. I don't ever remember the Fed having a market that's pricing in something that much and surprising. So I consider the chances are 0 of them not hiking. So it's all about the statement. It's all about the forward guidance. So if we do actually see some big surprise in the forward guidance, and we see that the market that's going to follow in the dollar actually is in the direction of that surprise, then yeah, I'm going to tend to believe it immediately. Now, if we see a statement that's more or less neutral, and I start seeing a decently big move, or a statement that's very, very softly leaning one way or another, and we still see a big move, I'm going to be a little bit skeptical, because very often in occasions like that, you see a knee-jerk reaction that's immediately getting retraced. Do we have any other questions, by the way, Stelio, since we covered those?
I'm covering that for you now, Steve. So basically, the last question was strong. Someone's asking, strong dollar and strong yen. If risk off happens, how can this work? So I guess he's asking, can we have a strong dollar and a strong yen, because yields maybe keep going up and the market could go down? What do you think?
Yeah, we can. We've actually seen it recently happen more often, but historically speaking, when it comes to risk-off situations, the yen tends to get better bid than the dollar.
Right.
And I don't think that on average that's going to change, right? Speaking of which, and I had just coincidentally turned to the yen, I remember saying here that once we clear this 111.50 area, I do believe that there is no real resistance up until we retest this previous high at 113.17. I consider that, in quotes, prophecy more or less fulfilled. I don't care about 10 pips or whatever. So the question is what happens from here? Obviously, being on a resistance, I wouldn't be buying, right? So, quite an important area. Don't forget that this exact same area acted as support resistance in the past as well when we were building that head and shoulders formation. It actually created a lot of headwinds for the shoulders, and that's what actually helped them craft them. So, I would be quite careful here because the easy part of the move is now done. That we're above, after breaking above 111.50. So, I would be a little bit careful here. Mentioning, by the way, Dale, since you mentioned the bonds, I need to say here that, the Bund,
Right on support.
The Bund reacted magnificently once again from that very strong area of resistance, which is the trendline resistance in this very broad formation. But I would start being a little bit careful here. First of all, I can easily count 5 waves down. You can do it with your eyes, very simply, although this might be an extended third, but it doesn't really matter. Second of all, we are about to test this ascending trend line. That's not such a critical trend line, I have to say, but it might do the job. And having to do with the treasuries, I know that Blake mentioned them before a little bit, but I want to say, there it is. Having to do with the treasuries, I want to say here the following. From a technical perspective, and once again, if we consider that, there is no event today, I would say that they're really, technically speaking, doomed, right? I mean, this was a consolidation in a triangle. I had drawn that a long time ago that, we either break above the triangle, in which case we get one more leg higher towards 122, 122.50 before likely a resumption of the move lower, or we break below the triangle, in which case we're headed to new lows. And I don't know if the Fed is going to save the treasuries, the 10-year, from actually posting a new low immediately. But the technical perspective is still looking extremely bleak for the bulls. I mean, it still looks very, very bearish. I would need to see like some massive candlestick reversal to then start considering the only bullish probability, as I see it here from a technical perspective, which would be what? A double bottom. Okay, because in essence, more or less, yesterday we tested the lows. So for all intents and purposes, if we actually see like a big reversal from here, we can be talking about a potential double bottom. But so far,
it's like the yen turned upside down, Steve. It looks like
exactly.
Looks like they're Siamese twins right now.
Exactly. The only difference being, though, Dale, is that in the short term you're 100% right, but if we zoom out, the yen did not produce a move like that to the downside, right? The yen.
Upside. It'd be the opposite direction.
No, I mean previously. As you see, the yen from its highs created a long-term consolidation. So, this structure, if you look at the previous uptrend, I can easily tell you that, it's easy to read it as a long-term consolidation after a huge uptrend that can easily break to the upside and resume higher, while the treasuries were seriously breaking down, meaning that I tend to believe that it's much easier for the treasuries to actually break down than for the USD yen to you know, to
Break
move
out
higher.
to the upside. Okay.
Yeah,
Interesting.
exactly.
Okay.
Exactly.
Great job, buddy.
Okay, we have an interview, I'm guessing, right?
Yes, yes, good guess. And we are professional guessers, so that was a great guess. Yeah, we do. It's
Okay.
kind of like Crypto Week. I have Kumar from the ICO Journal, the Rogue ICO Journal here today. So I'm going to ask him about you know, these ICOs. You know, I go pretty far back, Steve. The only new coins that I remember for years in the business came from mints of sovereign government. So now all you need is like a filing, and it can be made out of I don't know, cork, not silver or gold. So you know.
Let me make a fast comment on that. I don't know if the cryptocurrencies as a product is going to survive, but so I'm not sure about that. And I think that, you know, you can make any number of assumptions and nobody can be sure. But I'm sure about one thing. The vast majority of them are not going to survive. So, you know, they might survive as, of course, a technology, and some of them might even end up thriving. Personally,
Yeah.
I kind of doubt it, but I have zero doubt. We currently have something like 2,000 cryptocurrencies, something like that. I doubt. I'm absolutely convinced that the vast majority, like more than 95% of those, are going to vanish.
Well, I'm sure our guest is very psyched up now to come in and talk to us. But I do have a news flash for you about most will not survive. Newsflash is either, even if we're not aware of it, either will we. We think forever. We think forever, but you know everything.
That's 100% true.
All right, buddy.
That's 100% true.
All
Okay,
right.
enjoy the interview.
Thank you, Steve. I'm glad you're feeling better. You'll be able to catch Steve in the member chat. Kumar, I'm going to make you the presenter now. Let's see here. I have you, Kumar. That's still Steve. So, oh, here you are. Want to appreciate you coming. You know, everyone has an opinion. So Kumar, thank you very much for joining the FACE community today. Looking forward to seeing your screen and hearing your voice. And there, I see a Bitcoin chart up there right away. How about some sound, buddy? Check the drop-down menu on your mic. Let me just see if you have your... Steve, maybe you could help me with this. Kumar, do you see the drop-down menu up on top? I don't know if you're using a mic.
I see.
Okay, beautiful. You're there.
That.
Okay, you're good.
It was me actually speaking.
Oh,
I see that he.
Okay.
Yeah, I see that he is toying with his settings. But why don't you have a look at the settings in the Go to Webinar control panel? It's on your right-hand side. There is a tab called Audio. So under
his mic is on.
Yeah. So make sure that you've selected the proper source from there, not only on your computer, on your Windows, but also on the Go to Webinar control panel.
You got that, buddy? Kumar, because you're not muted.
Right-hand side.
We got to see what kind of music Kumar listens to. I wondered when you trade Bitcoin, what you listen to. I thought it might
be the music from Titanic or Armageddon. I'm
Titanic, the music from Titanic, or it's a jungle. It's a jungle, maybe. Are you any luck, Kumar? Maybe you want to log out, come back in. You could try that.
I see your mouse cursor, and I still don't see if you going to the right hand side. I know that we can't see the GoToWebinar control panel because GoToWebinar makes sure that you don't transmit that. But have you checked your audio there?
You know what? I'm gonna take you off being a presenter, and then make you the presenter again. It says he's connected to audio.
Yeah, but to make sure that the proper audio source from the GoToWebinar control panel has been selected, that's the key.
Okay, so I'm going to try it again now. How about now? Any luck? He's a panelist.
Yeah, it doesn't really matter. He's unmuted.
Okay. All right, I'm going to disconnect him from it. Does it miss? Is that you, Kumar? Okay.
No, that was me.
Okay, I'm going to try it again. No, I don't even see him in here.
Most likely he's trying to reconnect, Dale.
Yeah.
Which
Okay,
is a bad idea, to be honest.
Yeah. Give him a
So
minute.
let's give him a minute. Yeah.
Kumar, if you're in the house, let me know. I don't see you under attendees right now. Oh, there you are. Okay, let's try this again. I'm making you the presenter. Let's see if we could get some sound this time. Is that you or Steve? Clearing your throat.
That wasn't me.
Oh, Kumar.
Okay.
Okay, hi, Kumar.
Good.
Yes, how are you?
Okay, thank you for your persistence and tenacity.
Absolutely, I think.
Yeah, you definitely need that.
Finally worked out.
Yeah, you need that to be a trader. So I want to thank you for taking some time out of your day to talk to us about crypto and your website, the Rogue ICO Journal. I got a new follower. Is that also you, just straight ICO Journal? Or is that another company? Do you have two?
So the ICO Journal, I actually do the Bitcoin trading guidance for them. Yes, and
okay.
Yeah.
So what kind of life did you lead prior to going into the dark side of crypto?
Oh boy.
What were you doing? Curious.
So previously, I did some day trading with S&P E-mini futures for quite a while, and I've owned several businesses prior to that. But yeah, I mean, cryptos came along. I saw the opportunity to trade and manage a portfolio of cryptos. However, that wasn't my intent. When cryptos did come along, the intent to actually get into cryptos was to teach others how to trade cryptos, as I had made a trading guidance plan, sort of a layout, and that sort of transformed into an entire system, entire suite of trading education stuff, and that was something I'd been working on for quite a number of years.
Yeah. So why don't we get in the time machine and tell us what you were doing before you started trading E-minis. Are you? I think I read. Or where are you based?
So I'm based out of Nashville, Tennessee, and
Okay.
right, and I had actually gone into wholesale distribution and marketing for energy drinks, energy shots,
Okay.
this and that. I actually had done that for a number of years. A business I had started in college had actually worked out. So I'm 30 years old, and I had actually started this business, and it actually took off. So that became my career choice for a while. But had it not, I would have probably ended up working on Wall Street, or becoming an investment banker for a while.
Did the energy drink turn into an IPO, like bulletin board, pink sheet type of thing? And then and then I'd see guys like Carmelo Anthony endorse them. I mean, it was a big trend for a while. Energy drink.
I sort of wish it had gone that route, but it was a little more subtle. It was more of the taking small private label brands and pushing them across the southeastern United States. So yeah, but the Carmelo Anthony thing would have been far more exciting, but no.
Yeah. Okay. All right. Well, sounds like you've been trading the markets. What can I guess, say around 10 years or so?
Yeah, actually, going on 11. I started fairly young.
Oh my God, you got to call me Nostra Pinkert then. That was a pretty good guess, or Kreskin, but you're too young for that. So, let's see. I think I'm getting the alarms here. Let's get the bell out of the way. Okay, so, Kumar, so you sounds like you're a mentor, a coach, an educator. You and I share that in common. So, why don't we talk about what kind of methodology you teach? Maybe you could go over your setup here on Bitcoin. I see you're a candlestick guy. It looks like you have some type of maybe falling wedge that would allow for one more washout in Bitcoin. You have a 5,200 number there. That would look attractive to me. And let's see. You like MACD and stochastic. So why don't you tell us about how did you have any mentors while you were learning, or any books that influenced your technical trading and, to where you evolved to have your own style, but certain teachings or methods you learned elsewhere from someone?
Sure, absolutely. So, after being self-taught for the first, several years, through my college years, I was actually able to meet and shadow under a venture capitalist, and his prior, he's probably in his late 60s at the time, but in his prior life, his career choice was actually being a futures trader himself. So, I got a lot out of, that relationship for a number of years as well. And
how fortunate compared to all the things that people have to discern through now on the internet.
Right. All the noise and everything. And actually, I was able to just filter through all of that. Actually, to be honest with you, he was able to filter through a lot of that for me, and was able to give some guidance as well when I made a choice to switch over to cryptos for a while, because naturally being 70 plus years old now, he's not so much of a fan, right? And he's asking, what the heck are you doing here? But again,
he thinks a wallet is made out of leather.
Like absolutely,
me. Right?
So, right. I'm gonna kind of go over the trade setups and everything here with you.
Okay.
But before that, I kind of want to say with cryptos, I noticed earlier you guys were kind of talking about the volatility and it sort of breaking people out, and that's absolutely true. That's a core part of everything that I do and how I trade cryptos, is watching that volatility and making sure that you don't get snapped out, because the downside in crypto, even short term, is what stops a lot of people out. And if you notice, even in the long-term downtrends, your wicks are incredibly huge. And, you know, that's not something people are traditionally used to. So, again, as I go along the way, you'll notice I may speak a bit about how to, you know, place your risk tolerance. I think that's something a lot of people should learn, how to understand your risk tolerance.
Is leverage a big part of it?
Well, yeah, it is. But even for, you know, the inexperienced person that's...
Are you there?
Hello, Dale?
Yeah, got you. You're back.
There goes that mic again.
Okay, so we were basically talking about risk, how to manage risk, and you're talking about, you know, very big candles, a lot of stop hunts by whoever is trading both sides of the market at these crypto exchanges. Do you feel comfortable leaving large balances wherever you trade crypto?
You know, I do, and
Sounds
I don't.
like a
It
no.
just depends. No, it just depends on what it is I'm trading, how it's been, you know, trending. Am I trend trading? Because you know, I've been known to swing trade and even trade against the trend and hit pivot plays. But you know, if I'm absolutely trading the trend, and I classify something as a low risk trade, even though I would tell you know, general run-of-the-mill person trying to get into crypto that, look, there's nothing low risk in crypto, but when I classify certain trades, there's some that I say low risk, such as trend trades, and those I am a little more comfortable in leaving larger positions holding in. So you know, it just depends if I'm doing
those are positions though. What about cash? You know, unless you're fully margined up.
Am I comfortable with holding cash, large cash balances?
At those exchanges? Like, say you have a position, you liquidate it, you're back into fiat. Do you keep it there or you pull it?
I keep it there. I just, you know, for me, I've just never really had any issues. I know there's been many, but you know, until I have one, you know, who am I to say I shouldn't? I guess I just have a lot of trust in things sometimes, but and again, you know, I'm a millennial. My train of thought may be a little bit different than a lot of people. So
yeah, you guys don't even really like to talk, do you? You'd rather text.
Right?
Isn't that true? Huh?
It is. I was texting you, I think, and I didn't get a response other than through email, right? So
yeah. All right. Well, I'm going to shut up for a while, which is unusual, and why don't you take us through what you're seeing here in Bitcoin now, and you know, how you would mentor somebody on the current market setup here in Bitcoin.
Absolutely. I'm going to try and keep it a little short and sweet here, but this is a general, this is the daily candle chart for Bitcoin. Obviously 2018, which kicks off right here, has brought a lot of downside, and it stayed in a consistent downtrend after the run up to close to 20K, as everybody probably already knows. And now we've stayed in sort of this falling wedge pattern that's played out well and consistently over the course of the year, you know. And it's funny because every major pivot and peak, you have the entire market feeling that Bitcoin's going to go on this entirely different bull run that will just, so to speak, shoot to the moon. Dale, I'm sure being on Twitter, you can understand that the shoot to the moon phrase being used in crypto, that's come along at every one of these points, and you know, just kills me because,
or hold on for dear life.
Hold on for dear life, you know, we're the hodlers, you know, today.
And that's what they're doing right now, and hoping that 6,200 holds or 6,300.
Absolutely. So at each of these points, again, the technicals have played in very well. This downtrend has kept intact, and this downtrend line currently today resides at about, I think for today's trading, I have it set at about 6,900, probably plus or minus, you know, 20 points or so. Now, here's the interesting thing that I've found with Bitcoin. So the last couple downside legs, so as you can see here on my screen, we had a higher low registered here where the circle is. Okay, so the previous low, and when I say higher low, I am specifically talking about candle close and open. So
no
I'm not talking about the wicks right now. Right.
Okay, got you.
So that is a core part of my system. I can go on about wicks and use those wicks to determine certain pivot points on shorter time frames. However, right now on the daily, I'm speaking purely of the body of the candle. So right here, we were looking at about 58.50, I believe. And this last leg down, we were looking at about 61.40. So, you know, more or less, we're looking at 100 points up from the last leg down. Now, for me, that's very important, of course, because you've registered a higher low in a clear downtrend. After the retracement up to hit that upper trend line, and you know, as everybody can see, it hit almost perfectly right on the head here at about 73.60.
Another higher low, second higher low.
We have a lower high, excuse me. Yeah, we have another lower high right here. And we've come back to kind of test this level out again. And I've actually had this drawn out for anybody that follows the ICO journal and reads the daily commentary. This has served as an important level right here. This 62.50 mark, although slightly broken, has served as a pivotal area for the last month. Now, why? So the last downfall we had, again, 61.40, I think I said, somewhere in this range. We have not hit that again. We had a higher low right here, and I'm going to go ahead and use the candle open at 63.97 to share that.
So that's your second higher low.
Right.
Macro. Okay.
Now, what we just saw in the last, what is this, about the 18th of this month, what we just saw was 62.51 on the candle open here on the green here. 62.51. Now, I had a clear-cut, defined track that said, look, if we're going to hold the 62.50 level, which is this dotted line right here, if we're going to hold that level, there is potential for some upside, which we had, and now we're going back down with Bitcoin. So where does all that lead us? Well, that 62.50 level is serving as a very important price pivot line. Now, support and resistance, I do use, you know, consistently. I've got my level set here at, they're on 400-point bands right now. So we've got 6K, 6,400, and 6,800, which have played out very well. But that 62.50 level right in between is serving as an important mark. And I'm going to cater to the bulls right now because I don't necessarily, you know, just bet for one side. You know, I try and give both opinions. But for the bullish case, it's been an entire year as I've been providing guidance and watching, and I could say, look.
So you're constructive as long as we hold 62.50.
As long as we hold 62.50. Now, reason being, again, this is registering another higher low right now for Bitcoin overall on a daily scale. And that higher low is also coming very close to the long-term upper trend line, which is riding, again, at about 6,900 today. However, here in the next few days, as we see price action sort of climb, I think we're going to see that 6,800 level met. And again, that coincides with, you know, the major resistance level. Here's another thing. So at 6,800, we officially take back half or more than half of this previous leg down right here. And if Bitcoin can actually break that and hold that support, I think this will be the first time the bulls can kind of rejoice, as there may be some upside action coming. And, you know, the large scale picture of Bitcoin is very interesting to me because, Dale, you were around, and there's probably a lot of viewers that were around during the tech crash, because there's a lot of things about it that look eerily similar to the NASDAQ, you know, during the tech crash, and, you know, the track that the NASDAQ went on. The only difference is when I do the comparison, obviously, Bitcoin is moving at about a 10x multiple than the crash did during the tech crash for the Nasdaq here. So I want to go over a couple tools and tips, maybe Dale, unless you had some other questions on how I actually go about looking and trading these cryptos.
Go ahead.
So I'm gonna actually move over to some charts I have for you guys here, and how everything works out. So this is a Bitcoin price chart, and the system I use, I'm gonna go ahead and call it the Rogue Wave system on social media. That's what we call it, and that's what my users are accustomed to. So in Rogue Waves, I actually use a 3-wave system, and that 3-wave system consists of 2 pivot areas. There's about a 1/3 and a 1/2, and it's also calculated by the range of the previous leg. So we've got the low and the high, and then I calculate my pivots. So for example, in this Bitcoin pivot here, there was a high that hit about 6,400 a while ago, and retraced to about 6260, 20 points shy of the 6240 pivot. So
do you physically put stop loss orders in on your trades, or are they mental stops?
That's a good question. I don't, because again, generally speaking, there's times where that volatility in one candle, whether it be a 15-minute candle or a 4-hour candle, will wipe you out, right?
Okay, well, what if it doesn't reverse and it keeps going and you have no stop, and then what happens? Does that wipe you out too?
No. Now, here's the thing. I do have a couple ways to manage my risk, and again,
that's everything, isn't it, buddy?
I will, right. So I will use a general rule of thumb where I'll say, okay, the upside here that I'm looking at is about, let's say, 8% on. That's what I aim to gain off of this. So my downside should be limited to, let's say, 3.5%, and it depends on what item I'm trading. So like for Bitcoin, general rule of thumb, I don't aim to lose more than 2 or 2.5%. However, if I'm trading smaller time frames and I'm sitting there watching, that may differ a little bit. And my stops, yes, will generally be tighter. I do put a stop if it's overnight trading, because unfortunately I do have to go to bed at some point.
Right.
So those are the times when I'm looking at putting in stops. Other than that, it's about risk tolerance, how much you're willing to lose, and support and resistance. Is price action going to break support and keep going? If so, my stops place well under support, and that just has come with experience, knowing where to place it. Where the last few pivot areas are. I'll go back maybe a month and say, okay, when it broke this level before, this is where it pivoted last time. Let me put my stop right below here. That's within the 3% guideline. So,
well, I think this would be a good time for you to possibly show your website and how people could get a hold of you, and what your business model is for teaching, or if you have a trading room, and I tell you what, go ahead, cover Monero, and then we'll go. And,
yeah, I could go on. Honestly, I could go on for days. I've got.
Oh yeah, all right. Okay.
And these are just a few examples.
Yeah, I noticed on your website you have like a whole watch list, so I'm sure you have.
I do, and I've played all the smaller altcoins, giving guidance for everyone. This is another prime example. Trading with the Rogue Wave system. When price breaks into the channel, retraces it, let's say a third here, and I'd have a price target, sell at 88.50. And of course, generally, I'm right about 86% of the time right now, according to the trades I placed live on Twitter, actually. So if you'd like to follow on Twitter,
that's a hell of a hit rate.
It has been. It has been. I say I've been a little bit lucky as well, but
what's your worst drawdown?
My worst drawdown to date was 14%.
Okay.
I've got right here 14%, and
manageable.
Manageable, right? It was
Not fun.
in high risk. No, it was actually I believe it was on MFT, so not fun, you know. And
Yeah.
you know, I allowed my risk tolerance to break there, but hate happens, you know, occasionally. But I
Yeah,
don't
we're
let it
human,
happen very often.
Kumar.
We're human. So I will take you guys there. So this is where I'm writing. This is where if you'd like to follow along and see Bitcoin trading guidance, maybe sign up for the newsletter, and they've got plenty of extras here. Of course, the Bank of America story with Merrill Lynch. You know, you've got just several good pieces, CBOE stuff going on, the ETF chatter, and of course the Bitcoin trading guidance I provide daily. So please do follow if you guys have the chance. It's theicojournal.com. And of course, you can go straight to my Twitter page at Rogue ICO Journal.
What football game were you watching there, buddy?
Right here. Oh, none. I think that was the I think that was the homepage. It must have been someone else. But Rogue ICO Journal, daily guidance. I do it around the clock, 7 days a week, and it's of course it's free, as well as the ICO Journal stuff. I do it because I love it. I do it because I want to help everyone out there, and I do it because it's exciting. You know, it's cryptos. It's fast paced. It's fun, and there's a lot of chatter behind it. And if you're not interested in it, I don't know what you could possibly be interested in, because it's just so thrilling that Dale Pinkert had to reach out to me to kind of give my 2 cents about it. So it must.
Yeah, and you know what? It was right? Your 2 cents. It's worth at least a dime. All right. So I do want to thank you, Kumar. It's really a pleasure to meet you. And you know, I'm like the guy that was helping you, that was a venture capitalist. You know, to me, a chart is a chart is a chart. The only difference is beta and leverage. But you know, some of the fundamentals, I really think that if you are a crypto trader, you almost have to make it full time. Because I've been interviewing some crypto people, and you know, some have said, you know, look for the fiat moves out of Korea and Japan. You know, that came before Ripple popped. So there's so many nuances besides your charts to keep an eye on, and so many new things happening all the time that I think if you trade crypto, it's got to be like a full-time thing for you, and any other asset class becomes part-time, right?
Absolutely. And you know, one thing I'd like to say, just as a side note, to the viewers, is that anything happening within the crypto world, now this is just me personally, but anything that's happening in the crypto world, as far as the ICO market, the news and chatter, what banks and regulations are doing, any of this stuff, I'm going to be totally honest with you guys, and I say this on Twitter quite often. I don't look at any of that. I don't take any of that in. I trade cryptos, and I've traded them successfully now since beginning of the year, let's say late 2017. I trade them with nothing but technicals. I don't have any news pop-ups, any noise. I keep it simple, just technicals, and it works. You know, this is you know, something great my mentor gave me, and I'll leave you guys with this. Said technicals will always work if you trust them to and you understand them enough, because one thing that never lies is the math. Everything else and anyone else will always lie to you, but math never lies, and you know that still holds true in crypto. So.
The markets are geometry, aren't they?
Absolutely.
Yeah, I've always said that if you could add, subtract, multiply, and divide, you could trade. You know, keep it that simple. So you know, you're now my trading warrior brother and one of my go-to guys for crypto. Thank you, Kumar. Absolutely. And you know, thanks so much for dropping in, and I hope that pips rain down on you and your followers, everyone you're teaching during this fall trading season, and please keep in touch.
Absolutely. Thank you for having me, and you know, thank you for providing such a great web show.
Oh, you're very welcome. Thank you for, you know, sharing your views and some ideas on Bitcoin, and you look to be a great resource. So Thanks for coming in to be a resource and share your resources with us. Okay, buddy?
Absolutely. Thank you.
All right. Good hunting. And that's a wrap, everybody. See you in the private chat for the Fed. Thank you once again, Kumar. And everyone can follow Kumar at Rogue ICO Journal or at his website, theicojournal.com. I recommend it if you want to trade crypto. Here's another great source for you. Okay, adios, everyone. And remember, don't just count your pips, count your blessings. See you for the Fed. Thanks again, Kumar.